Good morning, everybody. I am so excited for this episode. Today, we're going to be talking about Activision, Microsoft, and I've got um, Florian Mueller from Foss Patents with me. He's going to give a quick intro, and I've got Arnold Principal with me as well. These are two of my absolute favorite people to follow, both on Instagram and on Twitter, because they're super knowledgeable about their areas. Now, I will jump into introduction in a second. I'm going to pass the mic. As a quick one, you guys know from my Twitters and my Instagram and from all my channels that I definitely have a position in Activision on this merger. I will talk more about that later. And then each of these guys, because they are brainiacs on their different industries, may also have some things that they want to disclose as well. Past performance not indicative of future returns. I'm going to hand the mic over format-wise to Florian to talk a little bit about the deal. And then I'm going to also bring in Arnold towards the end on options, and that will be the format for the show. But without any delay, Florian, go ahead and tell us a little bit about yourself, and then we'll start getting into what's going on here. Go ahead.
Good morning, May. Thanks for having me. So on my Foss Patents blog and in my username, I've included the Twitter handle, and people can find it at fosspatents.com. On that blog, I've been commenting on this merger. In fact, that blog has been around since 2010. And just prior to that, I opposed the merger myself, knowing Sony's perspective a little bit in another context. I do have to disclose the fact that among my various clients, there's a company named Microsoft, but I'm not speaking for them. I don't have any material, non-public information on this case. All of my commentary and analysis is purely based on public material. So let's talk about the deal.
Awesome. And then we'll do a quick intro from Arnold so that while he's on the screen, you guys know who he is. Arnold, tell us tell us about yourself. Tell us where people should go to find more about you.
Sure. Well, first of all, thank you, May, for having me. I've been a big fan of yours. I think you have wonderful insights into the financial statements of a lot of different companies and sectors. So I've been in this business over 3 decades. I'm an asset manager. I run assets for high net worth individuals as well as some institutional clients. But I also have founded and published a newsletter called Money Bodega. And so we offer trading ideas, both in options, ETFs, and stocks. And you can find me at IG, on IG at Money Bodega, or you can email me at support@moneybodega. Either or is fine. I always respond within 24 hours of receiving an email. So.
Okay, so just for maybe mini context, because a lot of you guys maybe just want a little bit of an intro to this, I do think that there is still a little bit on this trade at a minimum to watch. Okay, like if you guys don't necessarily do merger arbitrage, no one is suggesting anything as far as that goes, but the story is so fascinating in a lot of ways. Sorry, wrong screen. In a lot of ways, this is Activision Blizzard, a company we all know and love. It's got all of the Activision old school stuff, Call of Duty. It's got Diablo that just came out, and then it's got everybody's favorite when they have to wait in line for something, Candy Crush, and some of those purchases from King. And this thing has already been running for about a little bit more than a year. Very exciting. And just to set a little bit of the background so that Florian doesn't have to do that part, I started watching it because I love a good story as far as that goes. And this one has all the intrigue of everything. In December, I got my little date number wrong there. But in 2021, you had already a year's worth of sexual harassment suits that were going like crazy. And as these stories were coming out, they were just the most fun, juicy Jerry Springer type stories you could possibly see, horrific. And then you have protests from the actual employees, and you've got the CEO it just was the most sensational story of all time. And then Microsoft makes its bid in January. And from there, it's just been a very wild ride that you really do need the expertise of someone like Florian to read and look through. And while every merger arbitrage case does require some level of smarts of that caliber legal side, on the option side, a lot of times it's fun to watch the volatility increase and decrease because there is some of that that's being implied in the options price. And that's why I thought this show would be so much fun to go through. Fast forward a year later, and we're definitely getting closer to the announced time of the transaction. Florian, what do you think? Is this ever going to happen, or what's going on?
Yeah, well, actually, I've been quite optimistic for a while, but it ain't done till it's done. So
It's not done.
we should be in the home stretch now. Normally, one kind of like watershed event here is going to be the final decision by the UK Competition and Markets Authority, which is scheduled for the 26th of April. Maybe they come out a little bit ahead of that date, but it's going to be hard because they really do have a lot of work still to do. My understanding is based on a report by, I think it was the Policy and Regulatory Report PAR, that this week they were supposed to send out their remedies working paper and a draft decision to the two parties, to Microsoft and ABK, Activision Blizzard King. They did not make anything public, which is normal. Their guidelines say that usually they don't publish the remedies working paper, only if they want to solicit input, feedback from third parties. It looks like they've heard enough from Sony and whoever else might want to have their say and add their 2 cents. So I guess the CMA is now most likely working on the final decision, and that after that, we should probably also hear from the EU pretty soon, from the Commission.
Okay, so at this point, are there any other people that are contending living daylights out of this? I feel like there was some weird gaming group news too that I saw you post about. So Sony originally was the biggest, like, totally antagonist in this story of trying to get the deal through. Are there any remaining that actually have a shot? Talk us through those.
Yeah, well, interestingly, NVIDIA used to be sort of a complainant. They were not against the deal per se, but they did voice some concerns. They also participated actively in the European Commission's merger hearing over a month ago, but they were satisfied by and with the deal. They ended up striking with Microsoft. So it's a deal that has a condition precedent. It's contingent upon the consummation of this transaction. And then NVIDIA, they said, we are now happy and we are in favor of clearance, in favor of approval. Besides Sony, Google has been a lot less vocal, but they've also raised some concerns. I believe they primarily want to protect their mobile app distribution monopoly on Android on their platform, because part of Microsoft's plan here is that subsequently to this transaction, they want to set up their own Android app store. And Google doesn't like that. I mean, they paid $360 million to ABK to dissuade them from doing that a few years ago. And now Microsoft comes in. They're not going to give up that plan for $360 million or even more. Other than that, I think there are no serious complaints, except as you like what you just alluded to, May, which is that there is a private lawsuit by class action lawyers in the Northern District of California, and oddly, it increasingly looks like Sony is increasingly betting on that one. So it's a long shot, but somehow Sony seems to be supportive of that.
Do you is this common? Like, for those of us that really don't follow this everyday type behaviors, are like, what would have been expected versus what have we seen in this case?
I think that at the very outset, it was clear that this was going to take a long time, and that's what everybody was able to infer from the original statement by the parties, because Microsoft and Activision Blizzard said, we hope to close by the middle of 2023. So they allowed themselves 18 months from the beginning to get there, which is some kind of indication. Now, sometimes parties do that, and they know that in all likelihood they can do it within less than a year. But I think here everybody was realistic enough to understand that the overall regulatory climate and environment is such that, especially in major markets like the US, the UK, and the EU, regulators really felt they'd have to give this a great deal of scrutiny, that they would really have to do their due diligence, and that it was not going to be quick. So in that regard, I think it went as expected. There was one surprise, which was positive for the deal and made the stock jump up by about $5 about a month ago, or less than a month ago, which was when the UK CMA actually amended its provisional findings. So the provisional findings there are basically what the statement of objections is in the EU. It's where the regulator summarizes the key issues and how they view them. And they narrowed the case. They narrowed their concerns. So they dropped this whole concern that primarily, Sony had raised, which was, hey, Microsoft's going to use, especially Call of Duty, that first-person action shooter, which is wildly popular with a certain audience, a so-called AAA title, especially according to some of the regulators' terminology. They were going to use it to foreclose Sony, that they were going to use it to actually shift gamers away from Sony's PlayStation to Microsoft's Xbox. And the Xbox is a lot smaller in terms of market share than the PlayStation. And the CMA said, no, we've actually looked at the numbers again, and we've also looked at some of the other evidence, including feedback they got even from the general public and from other game makers. And all things considered, they concluded that this was no longer a concern. They just said, hey, actually, as we think about it again, Microsoft stands a lot more to lose than to gain from a foreclosure strategy. And a foreclosure strategy really has a couple of elements. One is that foreclosure would really harm a third party. But the other element is that there really has to be an incentive. And here, the CMA also agreed, well, actually, it's grossly unprofitable to do this. So there's a strong disincentive.
Okay, we've got some really great questions that we'll take just at the end of this. I want to show one really quick thing, and then Florian, I would love to have you also talk about. Well, while I'm preparing this thing, if you could also give us a quick heads up, what should we expect from a timeline perspective for us option folks, and for those of us that have been waiting for bated breath for how to think about this?
Yeah. I mean, obviously, I'm not in a position here to give financial or legal or whatever advice, but in terms of what I, as somebody who watches and analyzes and comments on such processes, can say is this. First, obviously, everybody who somehow has skin in this game knows that July 18th is a key date, because if Microsoft could not close the deal by then, they would owe Activision Blizzard a $3 billion breakup fee, and and they'd have to renegotiate the agreement. They'd have to negotiate an extension, and I don't think it will take that long for things to work out. My personal assumption, but again, I mean, I'm just voicing my expectations and predictions. I tend to have a reasonably good hit rate, but obviously I'm not infallible. And what I believe is that the CMA will clear this month. They've also said that they are on schedule. They just actually confirmed that again a few weeks ago. Then I believe the European Commission during the course of May. Their deadline right now is the 22nd, but they sometimes come out a little bit ahead of that, and that's possible. Will also clear. And then the question is, what do they do about that, about the US FTC, the Federal Trade Commission? I'm not concerned about the Federal Trade Commission, because even though it has a case pending before its own court, an in-house court, or as some people would pejoratively say, a kangaroo court, that court is not in a position, their own in-house judge is not in a position, does not have the authority to prevent the deal from closing. So the FTC would have to go to a federal district court, wherever they might go, DC District, maybe Western District of Washington, where Microsoft's based, Central District of California, where Activision Blizzard is based, and they would have to ask a judge for an injunction, a preliminary injunction. I believe that one would be denied, and that is probably going to be effectively the end of the story. And the moment it is denied, the next day, I think we are going to see the deal closing, which also happened recently when the FTC tried to prevent Meta, the Facebook parent company, from acquiring a virtual reality fitness app maker named Within. They failed to get that injunctive relief from the court, and Meta just went ahead and closed. And the FTC could keep suing and try to get the merger undone later. That wouldn't be of concern to you merger arbitrators anyways. But I don't think they're going to waste their time and money, and especially taxpayers' money, on that. So my assumption is, I think the question is more whether they can still close in late May, perhaps, or whether it will extend into June because of this preliminary injunction process, giving a federal district judge in the US a little bit of time to make a decision. So my guess right now is that this should be over by about mid-June, but we'll see.
Yeah. If I may interject, the market, according to Friday's closing price on Activision, certainly suggests that they feel that it will close, the deal will close. And so I do believe that the markets think it's trading at about 10% discount to the acquisition price. So that's not unusual. So that is well within line. So I do believe that this deal will close in July.
I'm so glad you mentioned that, Arnold, because that's what I was curious to get your intelligence. That looked really tight to me as well. But I don't do merger arb quite as often as I know is like your bread. Like you do all of it. So as far as I go, so 10 is really kind of 10 really does suggest that thing is going through in a lot of ways. But we shall see. I want to show this really quick little clip before we get into a couple of questions specific to the deal, and then we'll go into some fun options things as a conversation. I want to show this because for context, for those that are really still learning to look at these types of situations and what's important or what's relevant, part of the reason everybody's so up at arms really has to do with the fact that this is Activision's 10K. You can kind of see what percentage of revenue Sony, Google, and Microsoft, which now is asterisk for reasons that you can imagine. This is what it's a big deal for them to at least try to fight it. So it wouldn't have been so crazy to see the types of behavior that we're seeing in the marketplace. But unfortunately, sorry guys, it is what it is. It's probably going through, hopefully, knock on wood for me. All right, so I've got some really, really great questions. Let me stick them up here. One of the first ones, this one is... oh, sorry. It was actually coming from this one. This one goes back to the sex scandal. I'll go ahead and take this one really quick. Yeah, it was really bad, Trend Board. If you actually read through, a lady working in finance, I read it, was like, wow, that's actually really more than I'm used to. So you'll have to go through the whole trail of emails, but it involved everything from like people committing suicide because of what happened all the way through to like some things that were just really bad. And on top of it, one of the things that I'll show from the timeline, so they had actually, as a remedy, put Jean O'Neill as the head of that was where the lawsuits were the most problematic, and she resigned within like a couple months, not even, from being like the head of like number 2 or 3 in that company. So one can only imagine that it was a really significant problem. Okay, so the other things, I'm just curious, I don't know the answer to this or how to think about it, but is there any knock on, Florian, I know because you've worked in the space for so long, do you have any thoughts on any kind of implications it might have for Adobe?
I must admit I have not really had the time yet to look into that Adobe-Figma story in detail. However, just based on what I have cursorily read so far, I would consider that Adobe-Figma deal more problematic. Now, it's obviously getting a lot less attention for a couple of reasons. Figma is not publicly traded, and also there's not, the type of audience that is as irritable as the gamers community when it comes to these transactions. But Figma is like about prototyping in a way, and Adobe itself is not overly successful in that space yet. So they're just basically going to buy market share in a field in which they already are. I don't also see any clear indication of any pro-competitive benefits as opposed to what Microsoft's doing, where they stress that 150 million more gamers are going to get access to Call of Duty because of their deals that they've already signed with NVIDIA, Nintendo, and several other cloud gaming providers, most recently a subsidiary of British Telecoms. I don't see any such story there for Adobe-Figma. It's just a large, deep-pocketed company buying a unicorn startup in order to kind of like clear the market and basically monopolize one. What I would say is that generally this Microsoft Activision Blizzard deal is unique. It really does raise a unique set of issues, and I would not necessarily, draw conclusions from whatever the outcome's going to be. And May and I appear to agree on what it's most likely to be. I wouldn't really infer anything from that with respect to other mergers.
How do the developers feel about this? Can you give us some insight into that? What are the implications for the developers?
For the Microsoft side, Microsoft.
Yeah.
Go ahead, Florian.
So just to make sure I understood the question correctly, it's about implications for Microsoft or implications for developers? Developers.
On the Microsoft,
okay,
yeah.
Right. So I know the developer perspective. First, I think all developers nowadays have to also make mobile apps. And as a mobile app maker, and I've made mobile apps, in fact, and have run into certain issues with those Apple, Google App Store monopolies. Apple's is a straightforward monopoly. There's no other way to get any iOS app to someone than through the Apple App Store. That's going to change now in some parts of the world due to legislation like the European Union's Digital Markets Act, but that's taking time. And on Android, in theory, there are some other app stores, such as the ones provided by the device makers, but they're not really relevant. I mean, people don't go there to discover apps, and you cannot rely on them as your only channel to reach those billions of Android users worldwide. So in that regard, I think developers stand to benefit from this, because if somebody like Microsoft uses incredibly popular mobile apps, and they've got some of their own, obviously, like Outlook, Skype, etc. But on top of that, a game like Candy Crush, which is really like the game that anybody who's ever played a game on a mobile phone has played Candy Crush, and like 99% of all those people. That will give them a critical mass of titles that can really attract people, because it takes two things. One is you need to have this opportunity at all to open up your alternative app store. But the second thing is you then the platform owners still have what's called the power of default. Their app stores are the default ones that everybody finds on the main screen. They are the ones where everybody like instinctively goes to discover new apps. And that makes them unattractive to developers. But somebody like Microsoft with the Activision Blizzard deal should and would be in a position to really attract so many users to their own app store that would be an alternative, and not the only one. And by the way, one major developer, Epic Games, the company that makes Fortnite, of which Sony is a very small shareholder, the CEO and founder of Epic Games, in fact, welcomes the idea of having that Microsoft store. He's suing Apple and Google over this question of whether you can do your own store on those platforms and on what terms. And he's happy to compete with them, with the Epic Games store.
It's such an interesting space. Any other questions, Arnold, before I put you in the hot seat?
Sure. Well, with the introduction of well, I shouldn't say introduction of artificial intelligence, because it's been a while for quite a bit. But I'm wondering, how will that be implemented, assuming that this merger goes through? How will that impact game development, consumer engagement. Um, can you give us an idea of how ChatGPT, OpenAI will um, influence the consumer experience as well as the developer?
The first area in which game developers already are making quite extensive use of AI, of generative AI, which is the term for AI that does not just like identify objects and images, but will also produce something like an image or a text, is for graphics design. So that process has been automated now to a certain degree, although from a legal point of view, it's a little bit risky because there is a possibility of copyright violations. Those AI systems took their inspiration from somebody else's creation. So you never really know whether somebody else's drawing style and images somehow get incorporated into your product. But it's also interesting because in the game development business, in that profession, the term AI has been used for a long time. AI simply means that you have an opponent, like a chess computer, right? I mean, that's the most basic kind of AI you could imagine, but you've got the same in action shooters where you have non-player characters controlled by the computer that are going to run around and fire shots at you. And that's basically, we will see how that's going to evolve, but yeah, that's talk of the future.
All right. Guys, definitely put your questions in the chat because we're probably only going to go for another 5 to 10 minutes tops. We are going to start moving to options, but before we do that, I'm going to help out just a little bit with some valuation context for folks. The deal again, let me get to this slide, share. The deal is going to be done at $95 per share, all cash, which means there's no extra weird math that you have to do on how is Microsoft trading versus Activision. $95 is your marker. Now, if the deal breaks, a lot of folks have their estimates all across the map on where the stock would fall. Some people try to pretend like it would go as low as $65, but because this last game release has been so successful, nobody's really thinking that anymore. And also, more than one analyst has reminded the world that this company actually is quite cash rich. So what do I mean by cash rich? It has, even if you subtract the debt, the company has about $8 billion in cash. So this is how the numbers break out. It's just under 67 billion in market cap right now, which implies, given the revenue from the 10K, the next quarter will be released in this coming months. You've got it's about 8.9 times revenue, 44 times net income. But remember that that's a trailing number. On an EBITDA basis, it's a trailing number, number one. It also doesn't incorporate any net cash situation. So I always prefer to use EBITDA. And in this case, I'm happy to use adjusted EBITDA because there were some other charges, if you will, that are muddying up that number, namely the lawsuits portion. But that's putting it about 25 times adjusted EBITDA, which, if these games are actually doing well, is part of the reason why people are like, yeah, maybe it is actually worth $95 even on a deal break. So I kind of get that. And so it's not a zero risk that if the deal breaks, this thing trends higher. And so with that, you're in the hot seat now. What do you think, Arnold? What's a great option strategy for this? I mean, I have my opinions, but I kind of want to hear yours for sure.
Well, before I let me start with the disclaimer that everyone should know that options trading is not appropriate for everyone.
I totally agree. Thank you for that.
It's loss associated with trading options. Losses can and will occur, and options involve risk that may or may not be suitable for all investors. So, for information,
yeah, let's double down on that. If you're not used to this, if you don't do options, just use this as learning. Please don't just start trading options because May and Arnold told you so. That's not definitely what we're not. That's definitely not what we're saying. Okay.
So getting the generic standard disclaimer out of the way, OCC disclaimer. Let me say that the options community is definitely looks like it's definitely betting that the deal will be done. Um, I'm always looking when I trade options. I'm always looking for positive convexity, right? I'm looking to create a trade where my reward is far greater than the risk that I put. So I have a little bit of a creative, probably not so much creative, but more conservative um, uh, type of trade where I am selling an in the money put, right? So the stock is currently trading at 85.50, and as we mentioned before, it's a 10% discount. And what I'm looking at is I am doing a August, and I'm choosing the August expiration um, simply because that if we do get a closure in June or July, that includes that would include the time frame. So I'm looking at a 95 put, August 95 put, currently mid price 10.15. And I'm writing that put, I'm selling that put to open, and then I'm buying an August 85 put, currently trading mid price around 493, right? So net, you're getting a net credit, right? The net credit, you're risking about 478 per contract, 478 per contract, and you're making 522 if the deal closes, right? Where the strikes are 95, so we're assuming that short strike is right at 95, so we're assuming that that deal closes at 90 at the cash value. This presents, like I said before, a positive convex solution where you're risking less than your potential return, right? We want a non-linear type of trade. And the break even on that trade would be 89.78.
Okay.
Um,
Are you
so,
able to show your screen
so
on
that,
that at all, or?
yeah, absolutely. So let me go ahead and share that here. Um,
And hopefully I got this right while you're trying to do that, just in case. I and so this one you would take 522 in, and if you're wrong, you would lose 438. Let me actually edit that.
correct,
Okay,
correct. 478, 478,
478.
522, and 478. Let me go ahead and share that.
Okay.
And I'm using this site. Give credit to Options Profit Calculator, and the only reason I'm doing that. Normally, I would use Market Chameleon, which is where I do a lot of my options research.
Can you
And
increase the size of your screen a little bit, Arnold? It's coming in a little fuzzy.
absolutely, absolutely. Let's increase that. Okay, how's that? Is
I
that
think that might be a little
better?
better. Here, let me keep this down below
So
because it might be a little hard for people to see, but they could probably see the graphics. Yeah, it's still coming in a
yeah.
little bit on the fuzzy side.
Oh,
Let me see if I can. Oh, bummer. Okay, this one's going to come in a little bit fuzzy, but go ahead and show the graphs because I think that's probably what you're trying to show at the bottom.
yeah. So if you look at the payout diagram, you of course have defined risk. Always looking to, when you trade option, you're always looking to have defined risk. And then
You might need to decrease the
the,
size now. Sorry.
I'm
You
sorry.
might need to decrease the size slightly because it's showing up strangely.
Okay, it's really off. Okay, so let me go ahead and decrease that. Oh, you can follow along on the site. If you go to optionsprofitcalculator.com/calculator and select a put spread this chart, you would just need to um, select the put the put option, the put spread option, and then you would be writing the 95 put and buying the 85 put. Right. So again, net, you're getting a credit of
Clear it up.
522, and you're risking 478. Um, this I think is uh, a pretty good way of betting. I know, possibly a short butterfly or short straddle um, might give you uh, similar, somewhat. It wouldn't. It's a uh, negative convexity, but it would give you almost a similar return. I prefer this strategy only because my return's about 109% of my risk, and my break even is roughly about $4, $5 above current um, price, right? So, and
I like
the
this trade
only
better than my trade. This is a great trade.
yeah. So it the probability of profit on this is 41%. Alternatively, you could probably sell a um in the money call, right, spread. So maybe selling a 80 call out to August and buying a 90 call. Um, I did the analysis on this. I think uh, that one a debit of $622. No, it was risk of $378 per contract, but you get a return of $622 on that risk, right? So that's 164% return on risk. So, you know, again, if you have a level of a level of confidence about whether the deal will close, these are some of the ways you can trade this with positive convexity, right? The probability of profit on that trade would be 51%, right? So, and that's just based on the 30-day implied volatility. Okay? So, um, not sure if no one can know for sure if it will close, but I think these types of strategies will offer you the best return for the risk, right? And if you're right, you're not risking a whole lot compared to your in relation to your return.
So I have a question for you that I find so fascinating about this particular options chain versus some of the others that I've seen. Have you
Mm-hmm.
with the deals like this, it's most common to just go behind the deal date, maybe give it another month just in case there's a little bit, so that you have some time to kind of back it up if you need to when it becomes potentially a little bit more hairy. I looked at January, and oddly enough, the 95 calls are trading almost at $3 at different times, which is right at deal price. Not to put you on the spot, but do you have any thoughts do you have any thoughts at all on that as far as that goes?
On the deal, let me first correct you on the selling the 115. It's selling the 95.
Oh, sorry about that.
It's selling the 95. Everything else is correct. But to answer your question, repeat your question once more.
So the deal's being done at $95 from Microsoft. And I noticed that the vol on the January 95s is the vol on the January 95s is something like $3 if in January. And it's really like at one point the vol on the 95s was close to zero. But since some of the analysts have recently put out valuation reports that suggest that if the deal breaks, it's at least worth $85 for whatever reason. The entire market has moved that pricing for the 95s much higher. Because the implied price of a call that's $95 means that you think that it will at that date reach $98. um,
No, I mean, I think they're just pricing in the level of confidence in the deal trading. You'll likely find that the August expiration has a higher implied volatility than the January expiration. Um, I
it's true.
again, you can maybe do a calendar type of spread right? A calendar type of, especially with earnings coming up. I think they have earnings on the 24th, and Microsoft has earnings on the 25th. So there is an opportunity to play earnings even with this strategy, right? So
Yeah.
you can maybe implement this strategy, but then use a calendar spread, for example, in order to play earnings in the short term. So you might use a April, what would be the expiration? Like we have weekly. So
Yeah, there's almost
if
no
you
fall
look
in
at,
the Aprils coming up, so that might be a little bit less exciting.
yeah. So you could use, that Friday's expiration, um, uh, and I think that's what I'm gonna say 12 days away.
Yeah.
Yeah, about 11 to 12 days away. To maybe do a calendar spread, right? You could probably just sell vol, right, and hope that the implied volatility is elevated, which it actually doesn't seem like it is, right? So
Yeah.
uh, yeah, it doesn't quite seem like it is. I think the a better play would be perhaps a Microsoft um, earnings play, which is on the 25th, right, where you could um, either sell premium, like sell the straddle, right? Uh, I'm not a big fan of that, just because I'd want to cover my downside, right, on that. But you could probably do a calendar spread on Microsoft and hope that they have the implied volatility crush, right? So, and that would just be entailing basically selling that expiration and buying the longer dated expiration, and you can include your positive or bearish bias. You can include your bullish or positive bias, um, your bullish or negative bias, simply by moving the short strike, right? The single strike, right? So you'd be selling and buying the same strike, just different expiration, but you could move those strikes either to the right of the payout diagram or to the left of the payout diagram in order to show either a bearish bias or a bullish bias, and accomplish something similar. You'd want to be you might be as far out as maybe one standard deviation from the current price, right? Um, but again, it's one of those things where you don't know for sure which direction the price of the stock is going to go. The stock's going to go. So selling volatility doesn't you don't care in much, right? You're really just looking for the option. You ideally you want the stock to stay kind of dormant, not move, range bound, and that way you get to collect the short term premium and hold on to the longer dated option.
And so, just for those that are a little bit new to options and are just using this video as a learning, fun thing to watch on your screen, since now hopefully you've got a little bit of background on the story, and then you've got kind of these dynamics with the calendar spread. You're going to be long farther back in the calendar and short closer up, unless you've just got a lot of money, because otherwise the options committee is going to require that you margin a lot for that. And so, being short the front part of it, you're short the spread between, you're short mostly the time difference between the two. Okay. And so you are, the direction that you're taking is no direction, or if you're doing it at a different strike, you're taking the idea that it's going to come closer to you. The idea is that front leg you want to go to zero, and the back leg you want to either stay put or go up in value. And so that's what would actually make the spread widen, and then you would be able to then sell it for more money. So hopefully that helps people see it. But essentially, the other way that sometimes people say this to try to help people get it in their head is they'll say, you're selling this week to pay for next week, kind of like Wimpy from Popeye. As far as that goes, it's essentially Wimpy from Popeye Train. You want a hamburger? I'll pay you for a hamburger. What is it? I'll take a hamburger from today to pay you tomorrow, something like this. Anyways, so that's
Yeah, let me just add to that you want to look at the implied volatility differential, right? You want to make sure that front month has a higher implied
a lot of
volatility
volatility.
than that back month. A lot of volatility.
Yeah.
and you'll want to look back in previous earnings to see how much of a crush, a volatility crush, has the stock experienced in the past, right? And so that would help you make your determination as to how long you might want, what the differential and strike you might want in terms of the expiration you might want, and so on. So
and it's gonna be fun for those of you that are new to options and just want to watch but don't want to play along, which is completely cool in my opinion, because it's just fun. In fact, that's probably the best way if you've never done options before, to be fair.
Yeah.
But
well,
go ahead.
No, I was going to echo that.
Yeah, totally. And so it is the case, and especially for Activision last quarter, it was insane how much volatility increased on the week of earnings for whatever reason. I think it's because it coincided with a couple of other legal things that were coming out at the same time. So this quarter, if you've never watched options during earnings season, definitely have a look at this one and see what happens and in which week will also be very important. We are, let me see if there's any other questions specifically on this. We've got a lot of positive comments. Okay, I'm just going to acknowledge Abdul. Florian, when do you expect the deal to be closed? Like, what is the earliest closing date? And will the FTC Sony still continue the lawsuit appeal? Okay, we answered some of this, but Florian, give us your best guess for a date again, one more time, because all of us are going to be very, very much so watching it.
Yeah, I believe early June, first half of June is most likely, but second half of May, all going extremely well. Maybe also if the FTC settled with Microsoft, then that could also happen. There will be a preliminary injunction hearing in San Francisco in that so-called gamers lawsuit, the class action style private action, on the 12th of May. And the judge is going to want a little bit of time then to rule on this. I think 22nd is sort of like the earliest that Microsoft said. Now, regarding the possibility of lawsuits and appeals continuing, of course it could. I mean, if Sony or the FTC wanted, they could sue for a divestiture. They could seek damages. I mean, not the FTC, but Sony. All sorts of things could be done, could happen, but it's not going to matter if it happens. So, I mean, that would just be a distraction. It would just be a waste of time and money.
Okay, and Matt wants the same question on the CMS in some ways here. He says specifically, he said, assuming CMS rules in the favor of the deal, what is the likelihood the EU does the same before their current 22 May decision? Yeah, I see what you mean. And is there likelihood they need more time? Probably a typo a little bit. Go ahead.
Yeah, so it's CMA, not CMS, but I get the question.
I do typos. Anyone else? No worries, Matt.
It doesn't matter. First, yes, it is possible that maybe the EU will come out with its decision ahead of the 22nd. I mentioned that before, like a week or two or so, possibly even more than that. It depends really on this remedies process. Microsoft offered some potential remedies, some commitments. Then the EU sent out questionnaires, got feedback from third parties. And I think once that part is done, the EU can also rather quickly finalize its decision. So the CMA would surprise me if they came out well ahead of their deadline, the 26th of April. But the EU may not really need all the time until the 22nd of May. Could there be an extension beyond that, or a reason even, for somebody saying we need more time? Right now, I cannot conceive of a scenario in which that would happen.
Okay, and then final question, great question as well. This comes from Trendboard. I think he's looking for domino effects because there's a couple of different comments that he's made. He mentions Ubisoft in one comment, and then what do we think about the whole sector with Tencent also being probably very active in the space. Do you see gaming becoming this like really fun spot for Arnold to do his options strategies in going forward? And me.
It's possible that there will be some other significant acquisitions in that field, but it's hard to imagine that anybody would try something as ambitious as this one in the
Big.
near term, considering, it takes a really long time to get it approved. You actually will have to go through a lot of situations in which it will look very difficult to secure approval. But some smaller deals, and small could still mean $5 to $10 billion or so, may very well happen. Somebody, I think, also in the chat mentioned that, said like if Epic Games went public, that would be the biggest or the most successful IPO ever. I would personally say yes. An IPO of Epic Games would probably be the next major event for the stock market in the game sector, more so than the next M&A deal.
It's a great comment. And I would also mention on my side, nerdy research side as well, I have contended, even when the deal first came out, and maybe some people feel differently, that the head count is actually over and above the IP and all the other beautiful things that you get from a very competent group of people. But the head count is still very much so in demand. And especially in the case of Activision, where it got clobbered for reasons that were well, let's just say it was not a good situation at Activision if he was going to start to lose that head count. So being able to save that head count and bring it in-house, to me, that was an amazing impetus for the deal. But in general, because of the trajectory where his tech is going, that type of graphic headcount, that type of brain size is really hard to get, especially if it's already in a team format. So a lot of folks, if you're ever looking at acquisitions and mergers, realize that you do buy headcount. And part of the reason you buy it versus trying to hire it yourself is you still got to integrate folks, which a huge component of that is just getting them to work together and know how to work together. When you buy a company wholesale, that team comes in, they just have to be integrated into the company culture. It's a real part of what I'm looking at when I'm doing the fundamental side. And I'm going to take one last question, which I think is also for Florian. What about the gamers lawsuit? I saw Microsoft lawyer. Oh, you know what, Vossman, we did answer this because I know this is a very long answer. For sure, there are a bunch of others. So at the very beginning of this, Vossman, definitely have a look. And then let me see if there's any others in here.
I'll also say, while you do that, I'll also say that just introducing the environment that we're in, right? And that lending is, the appetite for deals have kind of diminished, right? We're in an environment where lending is contracting, and pretty much only those companies that are flush with cash probably would want to do certain smaller deals, right? Certain small deals. But I do not think that, I'm not optimistic that there are a lot of mergers in the pipeline for any of these areas. I think, especially technology, I believe, I feel is overpriced in this current environment. I think a lot of the PEs are actually higher, right, than what they were at the peak, of the market in early 2020, late 21. So there is room for more downside in the technology area, and so I'm not so sure that the appetite for acquisitions is there. So keep that in mind.
It would have to be in a very special sort of scenario. And with gaming in particular, it's the release of the game that can then throw everything off. So, if they have one bad game, that thing gets clobbered like crazy. And then you might, but absolutely, all of the companies, when the weird thing about gaming is that the multiple is one very important part because they are buying the game itself and the cash flows associated with it. But the headcount, the infrastructure associated with that always ends up forming the floor for these guys. So even though they get clobbered, they don't get clobbered as much as they usually do. But you are absolutely right. M&A activity is going to be a little bit awkward or just a bit. The thing with Microsoft deal, and then we'll just close it out. The thing that makes this Microsoft deal so interesting as well, which a lot of people forget, is that it is actually all cash. And it's very rare that you get these all cash deals. because no one has 61 billion or 69 billion dollars, quite frankly. And so, but on the smaller guys, sometimes you'll get the all cash deals because some of the big guys that would be buyers, Google, Microsoft, Sony, etc., do have amazing balance sheets. In an all cash deal, usually they're doing it out of distress. When given that Microsoft, Google, and Apple probably all so all the big players probably feel that their stock is depressed because the economy is depressed. It would be interesting if they did a stock deal. Let me say it that way, because usually their stock would be worth so much more, and to buy it, it would be awkward. Let's say that. So I agree with Florian and I agree with Arnold. The deals that you'll probably see are either very small and strategic, or we'll see a little bit less until we get a little bit more happening in this marketplace. But timing is everything, and us options traders, we're really talking about the next couple months at any given tops.
Yeah. we're short-term traders.
Yeah, and these deals usually are like Florian, what's the average length of how long it takes to close a transaction given market cap size? Give us some sense for that, for those that are newer at looking at these types of transactions.
Yeah, normally it would be less than a year. So the moment that when the deal partners make this original announcement where they say we need 18 months, I mean, that already suggests that they expect protracted processes, which does not, and in this case, I'm sure it did not mean that there are actual legal issues. It's separate from this political question that regulators believe they have a responsibility here, that there's a certain expectation that, especially if the acquirer is one of the so-called big tech companies, that they really just have to look at this from all angles and very closely.
And then for the really small deals, what's the shortest you've ever seen it close? Just out of curiosity, when they're picking up small guys, because we've got some folks here that are exclusively small cap.
Well, are you talking about so small that they would fall below notification thresholds, that they wouldn't even need regulatory approval?
You know what? What's your cap size, Arnold? Because I know you love to traffic in the small land.
Yeah, well, I'm under 5 billion, right? So, but I do trade large caps as well.
Sure.
But I'm always looking for companies under 5 billion.
All right, but publicly traded and worth a few billion, which means they would need regulatory approval in at least some jurisdictions, maybe not in 20, but in some. Assume that it will take them a few months to actually prepare the paperwork to make those notifications. That's a very important filing. During that period, they're already going to have some conversations with the regulators, but then all going well, in basically any of those key jurisdictions, they've got a fast track clearance option, which means that they could, after about 4 to 6 weeks, just say, phase 1, we are fine. We don't go into phase 2. Here, for example, China is already in phase 3, which in China is about the same as like a late phase 2 in the EU. If you have those smaller deals and things really go very smoothly, then if they go super smoothly, then it's just like 6 months maybe, yeah.
And then what is the threshold? I didn't realize there was like, I know some of the private companies get taken out. You never hear a thing, but what's the lowest? What exactly is this threshold you speak of?
It really is so market specific. I don't really know these numbers right now off the top of my head. It's really market specific because they're going to, for example, like the EU is interested in revenue levels within the single market of the European Union. The UK is going to look at UK sales. But those thresholds are relatively low. So to give you an example, that first big tech acquisition that ever got blocked by a regulator was Meta Giphy. It was just graphics basically. Yeah. Deal and that again, I mean, each of these deals has to be looked at based on its merits, and this does not imply anything for Microsoft, Activision, Blizzard. But Meta Giphy, they actually, I mean, that was basically a startup, and they then had to make certain transactions where they like paid out dividends to shareholders or whatever, so that they managed to fall below notification thresholds in a lot of jurisdictions, but they did not manage to do it in the UK, and then the CMA blocked.
Got it.
But it shows that the thresholds are low. If even a startup like Giphy had to go out of its way, and even though they did whatever they could, whatever financial engineering they could come up with, and they still didn't manage to escape UK regulatory scrutiny, and that was fatal to the deal.
Interesting. Okay, so it can be quite, I mean, like the regulators can just decide that it's just fun to regulate, so to speak, it sounds like.
Unfortunately, even that is true, that there are now in ever more jurisdictions, especially also in Europe, there are cases where regulators say, well, it may be below those thresholds, but we just think it's so significant, we're going to have a look anyways. So the regulatory field is going to remain worth watching for some time.
All right, well, we'll wrap it up because we're right at an hour. Thank you guys so much, Arnold and Florian. If you're watching this on replay, definitely stick stuff in the comments. I'll try to hunt these two down and find the answer for you as far as these go. Absolutely check out their Instagram and Twitter feeds and follow them. I get so much value out of both of them, and I wanted to bring them to your attention. And with that, have an amazing Sunday, guys. Good luck this week in trading and in your investments. Bye.
Thank you, May.
All right, thanks.